Hey traders, this is Blake Morrow with Forex Analytics, and you're listening to the week ahead video for August 28th, 2022. Wow, we just came off a massive week, and it was the Jackson Hole Symposium. We were all waiting for the Fed chairman to speak. He spoke, and the market moved. I have a lot to talk about. I actually am going to be going over some charts that they've gone untouched since the last weekend. And a lot of things happened that I expected, a lot of things, and a few things I didn't. We're going to talk about that and more in just a few minutes. But before I do that, I need to mention, if you like these week ahead videos, make sure you give us a thumbs up. If you see us on social media, whether it's Twitter, Facebook, LinkedIn, wherever you're seeing our videos, make sure you share them and like them over there too. We'd appreciate it. And then subscribe to the video so you don't, the channel, so you don't miss any of these great videos every week. And also all the content that we put together on our daily shows, the Flow Show and the Free Face Show. Both of those are free. And if you're not listening to those, preparing for your trading day every day from the Forex Analytics team, then you're missing out. Make sure you register and listen to those when you get a chance. All right. Let's get to it, and let's talk about this last week. So I'm going to revisit, before I get in the dollar index, I'm going to revisit what we were talking about in the S&P this last week. Let me find it really quick. So in the S&P, we were looking for a bounce off of this 38% retracement, right? If you remember, we had you had the 200-day moving average. I thought there'd be a little bit of a pullback, and then we might bounce into the Jackson Hole Symposium. And I had mentioned that there is some resistance up here I thought would get hit. Well, I really thought that would happen, but only if we had a Fed chairman that may have sounded a little bit more dovish. But you know what? He didn't. He was hawkish. And because of his messaging, his hawkish messaging, the stock market actually reversed and dropped. Now, the great news is about all of that is we know there's a point in the market that I like to say there's a line in the sand. That means that if we're above this line in the sand, you become bullish. If you're below this line in the sand, you stay bearish. And in this case, it's very clear. It's the 200-day moving average, and it's this channel resistance. You can see it here, here, and here. While we stay in that channel, while we're below the 200-day moving average, there is zero reason to be bearish, to be bullish, especially as we're at the upper end of this channel. Now, we get back down towards 3,700, 3,600. My tune might change a little bit, but as of right now, we have to stay bearish. So what does that mean as far as what currencies are going to do? Well, we talked about last week about the dollar index. The dollar index was, bouncing around between 107.50, which you can see as that support right there, and then also the resistance, the all-time highs at 109.50. And all week we've been talking about, is this going to be a double top, or is it going to be a melt up, a blow off top, double top or blow off top? Well, frankly, based on what we're seeing right now, it looks like we're going to get some sort of blow off top towards the top side in the dollar index. And what does that mean for the euro? Well, that means that the euro is probably heading lower. If you talk about the sterling, it's probably heading lower. The dollar yen, hell, that could even break higher. So there's a lot of developments that are brewing in the FX market that we have to be paying attention to. And let's start off with the euro. Failed euro attempt at 101. So you can see that resistance right there. As long as we stay below 101, and as long as we stay below this trend line right here, you have to stay bearish. And I've been trying to figure out what was going to be the catalyst that drives us, below parity and keeps us below parity. Well, with a hawkish Fed and with, us heading into the fall and electric prices in Europe extremely high, chances are those are the two things that are going to keep the euro dollar well below parity and probably trading closer to 95 cents in the coming weeks. So just be focused. As long as we stay below that trend line and below 101, I don't think there's any reason to be on the long side of the euro. We have to continue to start looking for new 20 some odd year lows in the euro. Sterling, same difference. You can see the sterling closed below support. Whoops, not a very straight line, is it? It closed below this 117, well, let's just call it 118 support. That looks like we're going to channel support, which is going to be down here around 115 and change. So you've got, strength in the dollar. It's coming through the cable. It's coming through the euro. And it's also coming through the yen. Look at the yen. The dollar yen might, and I've been looking at this as being a Gartley pattern. But you know what Gartley patterns turn into? For those of you that don't know, harmonics, they turn into butterflies, right? So if it's a Gartley and it breaks higher, it's going to end up being a butterfly pattern, which could be somewhere, could be, quite substantial. Really, I would think that the move might take us up towards 144 in the dollar yen. So if you look at the dollar looks poised to move. Now there are outliers. And these are not going to be trades that I'm necessarily looking for this next week or maybe even the next 2 weeks. But I need to point out that the Aussie dollar is still holding up very well. Let's go over to the weekly chart in the Aussie. Okay. The weekly chart in the Aussie is still holding up very well. I wouldn't be surprised if we get a dip down towards 65, 66 cents. And you just have to make this a complex inverted head and shoulder pattern with a little bit of a cockeyed neckline, which means that the right shoulder is going to dip a little bit further. I think the Aussie dollar could very easily dip down to the 66, 65 cent level. And then you have the Kiwi, which also is trading pretty heavy. Very similar type of patterns, but I wouldn't be surprised if we tested, these lows or near these lows once again. And you got the dollar Canadian, which has been really hesitant to move higher. But on a break higher in the dollar Canadian, we could very easily start trading back up into the high 130s. Remember, it's the dollar index, guys. It's not like, there are going to be better performing currencies against the dollar. Like I said, the Aussie, the Kiwi, the Canadian. But right now, it looks like the dollar index is poised to break out to new highs. And I think that's what you and I need to be prepared for. Now, before I get into, I want to talk about gold and I want to talk about Bitcoin. But before I get into those, let me mention this. Our sponsor of today's show is going to be the Trader Funding Program. If you guys have not checked out the Trader Funding Program, we had multiple traders actually access live trading accounts. You can get right to the Trader Funding Program from our website. They have now are trading our money. So if you want to learn how to trade our money and not your own money and not risk anything, but your assessment fee, and you get 75% of the profits, and we keep 25%. If you want to learn more about this and have an unlimited time to qualify, check out the Trader Funding Program. Watch this little 2-minute video at the very bottom of the TFP page, which once again, you can access right directly from forexanalytics.com. All right, let's get back over to the charts. And one of the other things I wanted to talk about, or two of the other things were, I want to talk about gold, because gold has been trading heavy, but you got to watch out. This is a weekly chart. Now, the daily chart, you can see, let me just zoom in here. Very, very critical support at 1680. Very, very critical. You can see multiple tests. If this 1680 level is broken, look at the weekly chart. That's also a 200-week moving average. That is massive support. I know there's, let's just stop for a second and talk about gold and why people are bullish gold. People are bullish gold for so many different reasons. But the biggest reason is inflation. It's an inflation hedge, right? That's the argument I've heard for 25 years. You own gold. It's a good inflation hedge in your portfolio. Everybody owns gold. Everybody owns gold because they think fiat currencies are going to get, eventually be non-existent. Whatever the many, multiple reasons there are to own gold. But if gold breaks 1680, my assumption is there are so many people that are long gold that we are going to trade significantly lower, maybe below 1500 in the weeks ahead. So just if the dollar ends up breaking out to new highs and we start going into, 20-year highs in the dollar index, 20-year lows in the in the, let's just take a look at the dollar. You know, you start breaking out to these levels. Let me find the dollar. I thought I had the dollar. I did have it. Oh, there it is. Yeah, you start getting the dollar, you know, to levels that we haven't seen since 2002, 2003. You know, you start trading up in those levels. My assumption is gold is going to end up getting rocked a little bit lower. And it's not just gold, it's other assets that have very similar to function to gold. Take a look at Bitcoin. Bitcoin is now challenging support, really critical support here. This is the big breakout point from 2017. You know, that was the end of 2017, and it was the last major bull cycle high. The problem is so many people are long Bitcoin at these levels thinking that, well, you know, it's held 20,000, so the next leg is probably going to be higher. You know, chances are, you know, if you start looking at this as being a flag pattern, you know, a flag pattern points in Bitcoin, just so you know, on a weekly basis, it points to about 9,000. Think about that. For those of you that are all, you know, if you're you know, long Bitcoin, about where it could go, you know, lower on a break lower. And like I said, if gold breaks lower, the dollar is, and you've heard other analysts and you know, talking heads talk about the dollar being a wrecking ball, but it truly is. As the dollar breaks out into new all-time highs or new multi-decade highs, it is going to end up just tearing apart other assets like Bitcoin, like gold, like stocks. So just keep an eye on the dollar, because the dollar is in the driver's seat right now. And if you all like this video, make sure you give us a thumbs up, subscribe to the channel down below so you don't miss any of these week ahead videos. And I want to say personally, thank you for spending your time with me. I'll look forward to seeing you on the Face Show Monday morning with the rest of the Forex Analytics team. Have a great remainder of your weekend. Hey traders, this is Blake Morrow with Forex Analytics. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.